Vince, Oaktree is up 11%, investors loving this deal, but what makes Oaktree, which is primarily a credit distressed fund and specialises in that area, an ideal fit with Brookfield, which seems to specialise in real estate?
Well, you just hit the nail on the head, Bonnie. These are two different private equity firms, very long established, successful, and leaders in their own fields. And bringing them together produces not only a more diversified business, which is what you want in these companies, because when credit is up, or down, you might want to make some money on real estate. But really interesting, it creates a real Goliath of a company. I mean, currently Blackstone is the world's largest alternative asset manager. This really catapults these two companies that had been large but not quite of the stature of Blackstone into really a new arena. They are now to be reckoned with more so than even before.
Vince, is this a late cycle move?
Well, I mean, we're late in the cycle, but it's interesting because private equity is kind of operating today in its own rhythm. Fundraising has been, for the last year and a half, at near record levels. The leaders of these firms are very bullish on the next 2 years and what they can do with their capital. So if you're a distressed credit fund, you're anticipating what's going to happen if economies move into recession. If you're a private equity buyout shop, you're also looking forward to asset prices falling. So late cycle, absolutely, but at the same time, these firms are really positioned well to take advantage of it.
How will they best use each other? So Howard Marks is still obviously so active and so focused on everything. Same with all of the Brookfield principals. What possibly could they do together?
Well, it was really interesting in this deal that they say they're going to operate these two companies independently. So the management teams, Marks, Platt, they're going to stay in their own positions running their companies. And so they're essentially going to try to keep the juice, try to keep the operations, the strategies moving ahead, but they can ultimately benefit quarter to quarter on the earnings side. And I think that's what investors are looking at.
Vince, is there a kind of back office advantage here? You put two sizable firms like this, they operate in different areas in the private equity world, but presumably their back office and regulatory structures are roughly the same. How much of a pickup could they get off that? Are there synergies here?
Well, in most big combinations, management finds ways to shave costs, but this was not really pitched as that kind of deal, where a deal driven by cost cutting. I think it's more of a deal driven by Brookfield wanting to get adopt a credit business that they were not major players in. And so the synergies that we tend to see in big deals, I'm sure there will be some adjustments in the back office, but I don't think that was the motivation here.